This is our Suburb Trends report for November 2021, and we'll be looking at where prices are moving across the country, either up or down, and why they're moving. And in this episode, we'll be discussing building activity and the renovation factor in price growth. Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent, co-host of Foxtel's Location Australia, and author of Auction Ready.
And I'm Chris Bates, mortgage broker. Before we get started, I need to let you know that nothing we say on here can be taken as personal advice. We always recommend you engage the services of a professional.
Don't forget that you can access the transcript for this episode on the website, as well as download our free Fool or Forecaster report, Which Experts Can You Trust to Get It Right? theelephantintheroom.com.au. This month, we've asked Kent to look into the impact renovations have on price growth. But as is often the case, when we ask what seems like a simple question, Kent discovers that things are never quite that straightforward. So, Kent, can you kick us off by briefly explaining how you've tackled this challenge?
Yes, so the data I went for is the building approval data. Now, that's mixed up. I'm just doing my reading from my cheat sheet here, but it's data that's collected through and presented through the Australian Bureau of Statistics. Now, what they've got is a data set that breaks down to a geographical area, which is called a statistical area 2 and above. And for today, I'm looking at an area called an SA3, which we speak about often. Now, this data set contains construction of new buildings as a total, and they present this as a count and also a dollar value. So the data that we're talking about today is the dollar value. The data set also has alterations and additions to existing buildings, i.e. the renovation stuff, and then approved non-structural renovation and refurbishment. So what I was trying to do to meet out the scope of what we were trying to do and outline for the show was to remove the new buildings and just isolate those other two. I couldn't do that. I went through, I spent a few hours trying to extract it from the ABS data. I couldn't do it, but that didn't stop the show. So what I've done is I've grabbed it, I've created some maps, and what we can do is extrapolate and learn from a lot of this particular data set, align that to areas that are not traditional or well-known house and land areas. And if we look at those, you'll gain some insights to say how much money is being spent in these built-up areas, these established suburbs or regions, and then compare and contrast that to how their price movements are, and then also then look across the country using these maps at where some of the building activity is at its peak.
I mean, I think it's a really interesting topic because if you, what drives median prices isn't just people paying more money, it's also people renovating their houses and spending more money and increasing the value of that building, and then increasing the value of the property, and that's pushing the median price upwards. So assuming that no one's paying any more for property, they're just paying more because they're buying, better asset in something that's actually been built. And so I think it's a really thing that's lost in markets that are spending a lot of money on buildings. They're pushing median prices up because the housing stock's increasing in value.
Well, some of the money being spent will surprise a lot of people. There's, and the trends of the amount of money being approved, the spend is huge. Yep. So I think it's an interesting factor. And what we've seen through previous shows, and one of the things, I think it was only 2 shows ago, we looked at how much the apartment space was masking. The median price of apartments is a real furphy in a lot of areas because you've got so many of the established dwellings or established apartments coming on at less than what they list for, yet the medians for those suburbs continue to grow up because we're including new stock.
Yep.
Similar principles apply to housing. Now, even if you applied that perfect Case-Shiller repeat sales index and you paired it to the same property, you still need to account for, well, how much did people spend on that property, either through a formal building approval or a non-formal fixing of the bathroom.
Well, that's the thing, is that we don't even have these in our data, right, Kent? Like, because it's hard to get that data, like people are doing cosmetic, doing kitchens, bathrooms that don't need approval, and that's, landscaping, lots of things and even the building approvals, like, it's not always the actual cost, is it? Like you've got architect fees, you've got lots of other fees, other subby trades that you don't have to include. When you did your build, Veronica, you don't have to give the exact numbers of what you spent, but what do you reckon you spent on top of the actual cost that you declared to the council, I guess?
I should know this off the top of my head, but it would... Okay, there's a couple of different factors here. One is the consultants' costs.
Yep.
So architects and, various consultants that you need to get various reports and all the rest of it. Now, probably, and I should really know this stuff, shouldn't I? Because I talk about knowing these figures, well in excess of 50 grand. Well in excess of 50 grand. Okay. So that's just on the architect and the consultants and the fees. Now, when you first submit your DA to council, you'll put a estimated build cost so that they sort of factor up all your council fees and your footpath fees and all those sorts of things based on that. And that might have been something like, I don't know, I think 600,000. But then it was a number of years after that I actually did the build, and it, we're talking at least double that.
Yeah.
Ultimately what it cost. So that even the number that the architect will put on the DA application is usually like, plucked a figure out of the air. What's the lowest number we can get away with? That doesn't sound ridiculous, like we're trying to rort the system in a way, right?
Yeah.
And then I could decide I want gold taps and, everything plated with gold, and it costs 3 times purely because I've got expensive taste. So Kent, in the ABS data, where does the value of the renovations figure, where is that derived from?
Yes, what I'll read off there is that data from their collection provides timely estimates of future building activity, et cetera. So obviously they do their best to survey and capture it all, but those anomalies that you just mentioned, same here, we went through it, we probably spent an extra 100K, those things aren't captured. But when you apply that same factor or same error across the board, then it's great from a trend perspective, great to compare through time, great to compare between regions. So I think, rather than worrying about is it 5 or 10% under, as long as the error is consistent, as long as those measurement errors are consistently there across all states, then it's a very powerful set of metrics to identify trends.
So I just want to clarify one thing before we move on. So Ken, the figures that the ABS have in terms of the renovation cost or the build cost, is that what has been supplied from councils?
Correct.
Right.
Correct.
So therefore, yes, what you say, the error could be enormous, but I would imagine the error in certain areas would be bigger than others. Like, so it could be a suburb or a LGA specific thing where, it might be double in some areas, the actual cost versus what's put on the application versus others where it might be closer. Does that show up?
Well, I think what you've just reminded me of is a current problem that I think everyone will face. Time will be a big variable where construction costs are going up because of timber and other supply costs. So I think what we'll probably find is the biggest error will be time-based. Because of the significant cost. We've probably seen that social media post where they've got a pile of timber used in framing for the houses, and they've got the pile of what it cost 6 months ago versus what it costs now, and the pile's about 1/4 the size of what it was. So there's been some huge price changes for construction materials. So if you know any developers, certainly the developers I talk to, there's some trouble. There's some trouble out there because if they're locked into fixed price contracts. A fellow I know, very senior figure in the building industry, told me there's a lot of builders in trouble because of that.
Okay. So we've included a link in the show notes to all of Kent's heat maps, so listeners can check and zoom into those local areas if they feel so inclined. But what is interesting, we're talking about the difference in amount of money actually invested in renovation. We're talking about the fact that skews the median prices. So when you're looking at median price growth in these areas or in any area, the amount of renovation is going to impact that. And we've talked in the past many, many times about the construction or the consistency, or what is it, what actually makes up median prices. So in an area that might have different segments, they might have really cheap, like I always use Balmain as a great example because you've got workers' cottage, you've got tiny little workers' cottages at one end of the spectrum, and you've got waterfront, harbourfront homes at the other end of the spectrum. And if a lot of really expensive big homes sell in one period, then it's going to skew the median up. And if a lot of the smaller homes a disproportionate amount of smaller homes sell in any given period, you're going to skew the median down. The reality is prices can be rising or falling, and in opposite direction to whatever the median story is. And so this renovation story is actually another layer to that, to say that really, we look at these areas, and this is challenging, I guess, my beliefs about these areas being the greatest for capital growth, because, if people spend more money renovating properties in these areas because they're worth more, then clearly that's going to skew medians to look like they're rising at even a greater rate than other areas. So I might have to look at my own methodology here. So let's dig a bit deeper, Kent. Give us some more insights into what's underneath this data.
Yeah, so obviously it includes the new building construction as well. And to your point about the medians is, if you're in an area, we'll pick on, say, eastern suburbs north. If the houses are being knocked down and a brand new one built and sold quite quickly to a fairly wealthy purchaser, then it's no different than a renovation, except it's probably amplified, obviously, because there's a lot of, but it's the same property, same address, just a brand new house. So I think that's an interesting one. So what we've done is we've got the usual suspects of your house and land areas where the big bucks, obviously, totals are being spent. But I'm going to start with New South Wales. And if we look at eastern suburbs north, now what I've done is I've taken the average building approvals count, the number, and the value of that over the last 24 months and taken the mean average. It's rounding up, $53 million per month in eastern suburbs north. Now, this is not a house and land area. It's a little bit built up.
And when you say eastern suburbs north, can you specify that for us?
Yeah, so by and large, it's Clovelly Road north to the harbour.
Right, got it. Okay, so pretty expensive real estate.
Cluses, Rose Bays of the world.
Paddington.
Yeah, the true eastern suburbs, as my eastern suburbs friends would tell me when I lived in Coogee, which was eastern suburbs south. So 53 million. So that's a really good example of an area where a lot of the money is being poured into renovation. So it's had growth without a doubt. We've seen, in the last 24 months, we've seen a 14% increase in price. Now that's pretty good, but there are areas where it hasn't had that degree of renovation and the growth rate's been significantly higher. So that was the first one we picked out. Then I've got another one, which is Ku-ring-gai. So what we're finding is a bit of a theme here is that these are established areas, they're wealthy areas, and people are renovating. And the next one was Ku-ring-gai, and that was rounding up $57 million per month. Now, that's got a lot of houses. The address count across that area is about 35,000, so it's a lot bigger, whereas the eastern suburbs north was closer to 29,000.
Yeah. So it's about 20% more houses, but they're also spending, a good, spending a similar amount. So you can see that the eastern suburbs are really spending money on a property basis, but it makes sense as well because the properties are much more expensive, so you probably want to spend more on them to get your money back.
Yeah, well, the sale median on this is 3.3 million for the east, and then it's 2.75 for Ku-ring-gai. And
I know this is sort of a different topic, but everyone knows my favourite report, the Pain and Gain report. If you worked in collaboration with Eliza Owen, for argument's sake, at CoreLogic, and you went, okay, because we know that certain properties sell, there's a percentage of properties every quarter that sells at a loss, right? But that report only looks at the top line. It doesn't take into account renovation costs. But could you get this sort of data and somehow apply a factor to the pain and gain data to get an estimate of actually how many more properties actually sold at a loss in a given time?
I'd put it that CoreLogic would have access via Cordell's to individual property data.
Ooh, even better.
So there's no reason why they couldn't come up with a deeper dive version of that existing report that actually looks at construction and or building approval data down to the property.
Wow, I'm going to talk to Eliza, but we're interviewing her in a few more weeks, and you know how much I love this report, so that I'm going to say, come on, Eliza, do it.
Yeah, I think there's a few conflicts of interest here with CoreLogic, though. I think the reality is a lot of their customers are developers and things like that. They can make that pain and gain report extremely more painful as soon as they start to split up data like that, include buy costs, sell costs, and those numbers would blow out and tell the true story. Unfortunately, it sort of just gives you an inkling of how bad things can be rather than the truth around what it is.
Well, that's a topic for another episode.
Would you like to move to another state?
Yes, please.
So we're going to go to Victoria. Now, Victoria has all the action in terms of new house and land. It's amazing. I looked at the top 5 SA3s for spend, the building approval spend, and the top 5 nationally were all in Victoria, and those top 5 were all representative of those house and land areas, but they made up 1/8 of all the expenditure. So 1/8 of the whole country was made up in just 5 SA3s, all based in Victoria.
Are they out of Melbourne suburbs or regional?
They're all those outer, so they're the Wyndhams. They're your Melton, Bacchus Marsh type location. So it's where all the building activity is. It's game on in Victoria.
Absolutely.
And when you compare and contrast that to New South Wales, you realise that things aren't looking good for a first home buyer in New South Wales when you compare and contrast it to what the heck's going on in Victoria.
Well, they're not looking good for first home buyers in Victoria if they're rushing off to buy that stock though either. So a different not looking good, but yeah.
Different argument. Yeah, absolutely. And then, and you look at the average lot size and that's a different argument.
What is the average lot size? Do tell.
The data that I've been looking at have been very, very small, under 350.
And we're talking 50 Ks out from the CBD there, aren't we?
A lot of them are. Not all of them are that far out, but I'll go back to the old days in my LMI. See how I said that in an old man's voice? But all the big claims that we paid were these, what we call green streets, these very, very small lot size streets where all the houses were on top of each other, and all it took was one Commodore on bricks to change the whole profile of the street.
Yeah.
And believe me, it happened.
Oh, no.
Yeah. Well, exactly. You start to get some... We've seen this on housing estates for clients as well, where they've gone from a very premium estate to, they've started to turn into more investors and renters, and all of a sudden, that's right, people are parking on the grass, they don't care about it as much, and the whole estate starts to lose its value because of the shift in it quite fast, actually. And so these estates have always potentially, they can, even if you feel like you've got the premium one, they can shift on you, and all of a sudden, it's becoming like everyone else.
So with regards to the theme of the focusing on the built-up areas, the standout here, all the numbers are so much bigger when it comes to Victoria and Melbourne. We're going to Boroondara, which houses quite a few of the wealthier eastern suburbs locations. 90 million average per month. 90 million. So
you're talking Toorak, Paran, Hawthorn, that sort of area?
No.
More the Camberwells and the
Camberwell.
Okay.
There's a lot of stuff there because I spent a bit of time there when I was down with Real Estate View and Real Estate Institute of Victoria, and these are big, beautiful houses. So there's a lot of activity going on there.
90 million a month.
And 90 million over the last 24 months was the average. So there's a lot of money being spent.
And how many dwellings are there?
Yeah. It's 50. I'm rounding up 52,000 address.
So quite
count.
a lot. That's a big.
It's a big area. It's a big map. Takes in quite a few suburbs, but again, the sale median 2.1 or 2.15, so just over 2 million, and the median price over the last 24 months has jumped by 13% in that area. So when you consider how much money is being spent, it does circle back to the point we're trying to make. There's a lot of money going into it. The question is, how many of the properties selling are those new and or renovated?
Yeah, I think
Can
the real
you
key
answer
thing
that?
when you look at the...
Oh, not today. That's for another day. But it's something that you would want to scratch the surface and say, okay, hang on, is this a true 13% increase over the last 2 years, or is it significantly less because of the renovation
Because in
factor?
those areas where you've got bigger houses, maybe I'm wrong here, and I'm always open to be proven wrong because it's a learning opportunity, right? Just in case anyone thinks that I think I'm always right. But if they're in more established areas, larger blocks of land, those lovely period homes, people spend money renovating them. Typically, and what I find the equivalent sort of areas in Sydney, people are renovating those to live in and to live in for 20 years. So then even when properties do come on the market, it's really rare to get a recently renovated big family home in that type of area. Do you find that, Chris, with your clients? You find many of them buying a big, lovely period home that's been renovated to a really high standard?
Oh, it's pretty rare. I mean, I can think of clients who have done that. And, a client bought in Bondi a couple of years ago, and it was like an amazing reno. And it was super hot, and they got it for a good price in the end. But, it's not that many, to be honest. It's usually unrenovated. Because I think you're right, or it's been renovated, 10 years ago, and so it's aged a bit now. But I think the flippers are probably not playing it.
Yeah, they go for smaller stuff.
Yeah, exactly. So the investors are going for that stuff. So the big family homes and spending, $600, $1 million on a build, then you want to enjoy the benefits of that renovation. And so, I think there's definitely people who do it, definitely in that sort of top end, builders that basically renovate their own houses and sell them because it's all tax-free growth. So it's a good strategy for people who can do building cheap. But it's not that common, right? People are usually renovating to live in it rather than to sell.
But if you want to profile the area, here's a quick snapshot of the census information that profiles Boroondara. Now, hopefully I'm pronouncing that correctly. 70% of family households, to your point. This is family dwellings. Fully owned, it's nearly 38%. So that's well above the average for an area that's so expensive. So it's a blue chip area.
Yeah.
And when you drive around there, as I have many, many times, it's full of mansions. It's beautiful and expensive.
Yeah. So therefore, you could surmise that the impact of the renovations on these properties isn't necessarily actually reflected in the medians.
I think a lot of people who are doing this type of work are doing it to live in it. The question more is we need to kind of pull up the listings in the area and look at how many are ticked fully renovated or new. That would tell us.
But also I imagine that there's a turnover that you could see in areas, so say in inner Sydney, for instance, or even in inner Melbourne, I would imagine where there's smaller lot sizes like Richmond, areas like that, for instance, smaller lot sizes, more terraces or semis or whatever, and it's the same in the inner suburbs of Sydney. There's quite a lot more development activity and there's a lot of turnover because, property gets bought, a year later it gets sold again in a new version. And that would be able to be picked up, right?
It's interesting though when you look at the what's happening in some of those areas that I made the assumption that there's lots of booming activity. Some of the averages for some of the SA3s that I thought would be bigger weren't as big. So Leichhardt, 14 mil, not as big as what I thought. That's just the average. So that's an interesting one. So that sums up Victoria. And yes, I think what you've got is a fair bit of activity in the inner ring areas, but certainly there's some interesting spots, things I want to get to. The one that's the standout for me is it's Caloundra up in Queensland. So I just changed states. Caloundra was much bigger than what I anticipated. It jumped off the map, and I didn't take Caloundra as a house and land area, but obviously it is based on these numbers. So there's a bit there, but stand out, and what makes Caloundra so interesting is so much of its coastline. And these house and land areas are, by and large, are surrounded by land. And here's one that's got a stacked, nearly 67 million average per month. And it's very, very coastal. So it's I think Caloundra is one to watch. It's standing out for a lot of different reasons.
Are they
the
building
amount of
lots
money being
there,
spent,
though, Kent?
Yeah.
And they must be building a lot of apartments there, right? On the water.
Well, but this is just, I've just pulled out the houses here. So the data here is just houses. I've removed the unit data layer.
Yeah, right.
So there's a lot for a spot like Caloundra. So that was interesting. So that kind of sums up that. Now I had a few interesting things. I had some notes here. So we covered off that the top 5 were in Victoria for the big ones. The rest of the top 10 were made up of Bringelly, Green Valley. So this is traditional house and land. Geelong, again, we've spoken about Geelong.
Massive
We know
building.
it's lots and lots of house and land. Yes, there's a bit of coast there, but there's a lot of land inland in that Geelong. So it's a big area.
Yeah.
Blacktown North, we all know Blacktown North. Surf Coast, Bellarine Peninsula, we know that as well. But again, a lot of land. And the last one on it's good old Rouse Hill.
That was
so
featured in our very first Suburb Trends episode.
But the thing about it is, the market dynamics of Rouse Hill have dramatically changed since our first program. So when we were watching it, it was very, very alarmingly high levels of inventory. It's no longer a red dot on the map for me.
So what's
That
happened
shows
there?
how much desperation's in Sydney, though, right? Because listings have come down just because people are having to go further and further, and just the shortage of housing. And this is just in lines with, what you're saying there, Kent, is there's not as much building going on in New South Wales, the house and land packages, as there is in Melbourne. Like in Melbourne, and I always feel like that when I go down to Melbourne. I maybe I go to the outer suburbs a bit more, but I do see that it's just estates and estates and estates. When you're flying in on the plane, you can sort of see it, in the west and in the north, etc. But I think what's happening is they're just not releasing land as much in Sydney, and that's potentially protecting a lot of these house and land package areas because demand's pushing there and the supply's not outweighing demand. And so that's why you're still seeing price rises in these estates, whereas in Melbourne they definitely aren't going up anywhere near as much.
Well, I wouldn't want to be a first home buyer in Sydney, period. I mean, if you had 600 mil, you're out. Forget about
600 mil will be fine.
600,000. God, I wouldn't mind 600 mil. Sorry about that. I'm being distracted. I've got dogs barking and kids in the background because the kids are still at home, so it's driving me nuts. Hopefully you can't hear it. So now it wouldn't be a show if I didn't mention a particular location.
Oh, Logan?
Yeah,
what's that? Name of Newcastle.
I was thinking of the wrong show. I'm thinking of Suburb Trolls.
So, don't go there. People will be deeply offended if they go off this show and listen to that one. So we're doing a bit of a comparison, and Newcastle had peaked in March at 61 million.
Wow.
This is not, Newcastle SA3 is not a house and land area, right? So there's a lot of stuff. So I kept on saying, everywhere I look, there's another tradie or another DA popping up on my alerts. It's game on. Well, now I understand why. It peaked 61 million of approvals in the month of March. The average over the last 24 months has been 35 million. So there's a lot of renovation. Now, compare and contrast that to a place called Wollongong, where you'd be familiar with. That peaked at 40 million in June 2021, and the average is 24 million. So there's a lot more money being spent relatively in Newcastle and Wollongong.
Is that to do with migration?
We're definitely seeing some really interesting things in both of those cities. I think clients are now going to Newcastle. Like, it wasn't happening before. We were getting Novocastrians come to the Sydney, work in Sydney during their 20s, and then they meet someone and maybe they try to settle down in Sydney. But a lot of those are priced out of the Sydney housing market. They're getting to that family stage. They're from Newcastle. And they can get a lot more for their money up in Newcastle. So absolutely we would get... and Newcastle is more attractive for the people who wanted to explore the world in 2021 than it was when I grew up there. And so, it's a bit more of a bit more happening, I guess. And so people, Novocastrians would move back. But people who weren't from Newcastle wouldn't move to Newcastle. It was just too far. But absolutely, we're seeing it shift. We're seeing that people go to the Central Coast. They look at the Evokers, they look at the Uminers, Edelongs, and then they go, actually, you know what? I don't really want to be in Lake Macquarie. I'd rather than just, if I'm going to go that far, I might as well bypass that and go all the way into the inner ring of Newcastle, like around the city and, Merriweather, Adamstown, etc. The same thing's happening in Wollongong. We had lots of clients try to buy in the Thurools, the Bulleyes, etc. And now they're outpriced over there, and they all just want to buy, the Mangatons and Coromoles and Fig Tree and all these suburbs just around the train stations to the north. And there are lots of old housing in these areas. Like, every house needs a reno, right? And so I think these building numbers are going to go through the roof because they're going down there and their borrowing capacities are way more than they're actually spending. And just they can't spend that. They just can't find the properties that they haven't got the deposit and they can't spend all their capacity. And so I think you're going to find those numbers are going to go through the roof, Kent, as Sydney-siders move north.
Keep going, yeah. Well, I can see they're moving north, moving south. I mean, Fig Tree, though, I have to mention it, that pocket up there, I love it for so many reasons. From a market perspective, it's so isolated. You've got coast and escarpment and rail. It's just so few properties. So there's quite... From a market analysis data perspective, it just stacks up. Now, it wouldn't also be a show if I didn't mention my favourite spot, Byron, representative of the Richmond Valley coast. 37 million average per month. Now, this has been fairly stable and flat over the last couple of years. 37 million. So it's a happening place.
Yeah.
You probably didn't already know that,
No,
right?
I was wondering about that area.
Yeah. So, and then you did mention Lake Macquarie. Well, Lake Macquarie is split into two, Lake Macquarie East, Lake Macquarie West. Lake Macquarie West does have quite a few house and land. Lake Macquarie East, not as many, still has a fair bit of building activity, new stuff, but it's 28 million. So it's up there too. So when you look at, both Newcastle and Lake Macquarie East in one go, there's a lot of trade activity going on.
So this data is, you've looked at a year's worth or?
I've looked at 2 years. I've downloaded 2 years of data and I've tried to smooth it out. So what I've done is I've taken the mean average to come up with a monthly average. I've taken the mean of those 24 months to come up with something that just wasn't driven by...
Yeah, got it. So therefore it's hard to know what 2 years before that looked like.
Oh, it's all in there. I didn't.
It's beyond the remit.
But it's all there.
Yeah. It's only through talking through through this data that I go, oh, more questions, and you're like, oh, could you have thought of that one beforehand?
Normally I get tripped up, but this has been fascinating because I've always focused on building approvals from the number, the total, because I use it as a risk metric when I analyse. I say, what's the proportion of housing stock that's made up of new builds? And if it's above a threshold, I consider it a potential risk. But this has been quite different. When you look at it with a dollar sign, you have a newfound respect for it, especially in those built-up areas, because it could mean one or two things. It could also mean that there's a lot of money being injected in. There's a lot of people moving in and spending their money. Therefore, it's not a negative in terms of the local economy or the housing market. So there's nuances. It's
an investment in the area by owner-occupiers as opposed to, or in potentially then you've got developers that will fall in there because they see that and then they see the opportunity there as well. So it's an interesting exercise to pull this apart, isn't it?
It is, and then you got the multiplier effect, so it's good for jobs.
It's good for jobs. Oh, dear.
All right, so you're just about to say, Kent, what's our anomaly?
Well, I was, but Chris took a deep breath there and I thought, he's got a big question.
Yeah, I was going to say something, but I changed my mind.
He's got something to say.
Yeah.
Why?
I changed my mind. I thought, that's probably not going to add more value, so I thought I'd stop it there.
Now we're intrigued.
Now I want to know. You know those when someone says, "Oh, go and tell me." No, you really don't want to know. Tell me, and then they tell you.
Well,
and
to
it's
be
like,
honest,
oh yeah,
I think one of the areas I do think it is interesting. I think the western suburbs and the fringe suburbs of Melbourne. I think that to me, when I look at this data, I'm just like, wow, that is a lot of money that's happening. But I also think in the south between the Gold Coast and Brisbane. And you look at how much building's happening there as well. The Gold Coast is becoming another hot market. We are getting that in conversations a lot, where people are, willing to... It's an interesting thing for people to leave Sydney for. It's definitely a comfort factor there, and people really want to go and see what it's like on the ground. But it's like some area that people are definitely considering to go to, and that's always that land there is all restricted because you've got escarpments and water and lakes and all that sort of stuff. But that land between Brisbane and Gold Coast, there's just so much flat land.
There's a lot of it
and
there.
If you look at this map, it just shows that that is where the hunting ground for developers is going to be, right? And they're building, hundreds and hundreds of millions of dollars of per month of approvals that are going through. And it could go on
that's
for a long
really
time.
good segue. That's a good segue because my anomaly is the Gold Coast hinterland.
Ooh, do tell. And it wasn't even set up that way, Chris. You took that deep breath,
and we perfect. That's why I grabbed it and I spoke over the top so rudely. But so my anomaly is the Gold Coast hinterland because I expected it to be bigger. I expected to see a lot more. So it peaked at 16 million.
Not much at all.
So that's its peak, and the average is 6 mil over the last 24
How many
months.
dwellings?
So Gold Coast hinterland. I'm going to go to the map.
Going to the map.
I'm looking up here. Go to the map. Go to the map. Jimbuba, no. I'm going to scroll around the map. Ormo. There you go. Gold Coast hinterland. Address count 11,000. So it's not big. Yeah. They're all kind of spread out. So probably made up with a lot of mountains and a lot of escarpment. But there's still a lot of land. It's a big area. It's a big area.
Big houses, right? So therefore, you'd spend more money when you have to renovate a big house.
Well, yeah, and it's all houses pretty much, 97% houses. There's really not much activity. There's 5% are units or apartments.
I think what you'll find there as well, typically people would have upgraded within Gold Coast, so they wouldn't have done the big reno. If you need a bigger house, you just sell and you buy again. What you'll find now is that the interstate buyers will be pricing out the locals. The locals will be forced to then just renovate. I think you'll find that the higher price leads to more renovation. Also allows people to renovate more with not worried about overcapitalising. You can spend $300 and know that you're going to get that back because you're going to sell your place for at least $500,000 more, plus what you're going to add from a reno. So I think what you'll see in a lot of these areas that the higher prices, rise in prices leads to a rise in renovation. So I think if we did this in 12 months' time, I think you'll find that those stats will flip the other way. Don't know. What do you think, Kent?
I don't know, but I've been eyeing off Currumbin Valley. I quite like it.
It's lovely up there. It's very lovely. But it does get really sticky in summer.
It's all right. That's what air conditioning and swimming pools are for.
You're not an environmentalist, are you? We could, just make sure you put your solar panels up there, but there's too many trees.
Yeah, true. I've because we built a new house here, everything's like I've got water tanks here. I've got more solar panels creating more energy than I can use. So I'm pumping it out to the street. So I'm greeny as. I'm super green.
Greeny as. Well, it's good to hear. I actually can't get solar panels on my roof because they've got trees overhanging, which is really annoying. So, I wired it all up and then found out there's no space to put them until they actually the technology actually makes them more sensitive to less light, and then we're good. Anyway, there you go.
So there you go. That's now what we've got here. We've got 3 states covered with SA3 heat maps that look at building approvals, total building approval from a total expenditure dollar value perspective for houses only, not units. And then I've also got the SA3 time series going back 24 months. So every SA3 nationally has a time series chart there as well on this page. So there you go.
Thank you very much.
I think we haven't done the units, but I do think the units are something that we would be interesting to do, maybe, in 6-12 months' time. I think you'll find the data is pretty obvious. There's been no demand for apartments, building approvals, and have gone through the floor compared to what they were like in that 2015 to 2020 or 2019 sort of period. But I think what we're also seeing is buyers come to us who are looking to buy off the plan or have or are considering it because the reality is they're missing out in the housing market. They're looking around and they're looking for solutions. And so I think what you're going to start to see is developers start coming to market because they know they can sell it. There's so much desperation out there and so they can start selling these apartments again. So I think you're going to find the next couple of years, because of high prices, that means developers can sell apartments for more money, and so building approvals for apartments will start going through a building boom again, and that will happen across Sydney, Melbourne, Brisbane. And so whenever there's more demand, they build more. And so that's why you've got to be very careful when you play in these high density space.
True, but the cost of building's going up as well, so that's another pressure on prices. So, yeah, I think, so we put you on notice, Kent, 6 months' time, we won't do one on units. But any ideas for next time we meet?
Oh, I'm so ready for this. Build to rent, multifamily. Now, here's my theory. Here's my hypothesis. They are going to be all in Australia. It's not going to be a ma and pa owning a multifamily like in America. It's going to be a corporate landlord with lots of advantages, tax advantages, lower costs, lower operating costs, economies of scale. And I'm holding out the theory that it's another layer of risk for an apartment investor or an apartment buyer that now needs to be factored in, because you are going to be crowded out, in my humble opinion.
Interesting. So mum and dad investors are under, there's a threat there, a looming headwind.
Another layer.
A looming headwind.
Another layer of risk in a multi-layered cake of risk already for apartments.
Well, and so you've got some, you've got some tricky little plans to actually come up with some information, data-led information in our next meeting. We look forward to that. And thanks again, Ken.
Thank you.
Thank you so much, Ken. I think that's a really interesting one next month. I think all the big players are going into this space. Every developer is moving to this off the plan.
And they're all corporates. They're all going to be corporate landlords. They're all going to be too big to fail, right? So they're already getting the tax concessions lining up.
Yeah.
They're going to be borrowing at funny money rates. You do not want to compete with a multinational. Sorry.
And the super funds are going in this space. Adam Hurst, who was on this podcast, who was working at Mirvac at the time, he's gone and opened up his own build-to-rent building company. They're looking for long, sustainable income for their super funds, right? An asset they can sort of put money into and know that that's going to give income for their members. And build-to-rent makes a lot of sense. So, I think it's a really interesting one to keep talking about.
If you're looking to buy your dream home or an investment property in Sydney's inner west, eastern suburbs or North Shore, my team and I can help you buy without regrets. Reach out via my website, gooddeeds.com.au.
If you're looking to buy your first home, thinking of upgrading into a new one, or purchasing an investment property anywhere in Australia, my team love to carefully guide you on this journey. And most importantly, get the finance right. Reach out via our website, wealthful.com.au.
Thanks for joining us. We'd love to see you again.
And remember, don't be a Dumbo.